I hope everybody has had an absolutely fantastic DPW. It's always great coming here each year. The title of my talk, and I know you came to learn about data assets and SaaS, but that sounds a little bit boring. The title of my talk is One Chair, One Chart, One Truth. And I want to tell a story and then get into how I discovered data 25 years ago, and by stroke of luck, I discovered it again a few months ago. And whether you're a technology company or a corporate or even in the investment community, the data in SaaS today, I believe, is going to generate not only new businesses, but potentially new P&Ls, not only for tech companies, but also for corporates as well. So let me tell you my story. By stroke of luck, I got into the procurement technology space in the late 90s. I worked for a company in Pittsburgh, and I'll show you the slide in a second on the office high-rise. We were very proud as a $5 million company at the time to put our name on the building. That was back when the dot-com boom was a very different era. But like all the tech companies at the time, the status symbol was the Aeron chair. And what I learned very quickly at FreeMarkets in my tenure was that Aeron chairs can cause a lot of damage besides being good for the back. So let's talk about that. So I got to FreeMarkets out of consulting, and FreeMarkets was one of the original strategic sourcing companies. If you remember it, it competed against Abbreviate from Kearney, and we introduced the notion of reverse auctions into industrial procurement, castings, forgings, printed circuit boards, and the like. When I joined, I had the fortunate or unfortunate job of becoming kind of a staff leader for the executives. I was in corporate development, and I learned very quickly in that role that I also had to become a psychologist. FreeMarkets had one of the most successful IPOs in history and one of the biggest implosions in history as well. When we went public, our trailing revenue, I think, was $6 million, and we were valued at over $5 billion. But very quickly, not so long after, we had some peers, some competitors, Ariba, i2, Manugistics, Commerce One. And while our stock price started its downward trend, those guys were going up. And I dealt with this situation with, let's say, a couple of founders and executives who were quite upset by that. And I should frame the stage. Two founders of FreeMarkets came from McKinsey, much smarter than me, but they built a good business and had egos, not necessarily a bad thing. And the executive who came in, Dave McCormick, would later lead the biggest hedge fund in the world, Bridgewater. So these were smart people. And the executive who threw the chair will go unnamed. But there was an executive who was really, really upset that our stock kept dropping, and our peers, who were just, what we would learn in a second, playing the PR Newswire game, had stocks going up. So we were winning a lot of business at FreeMarkets. We had a lot of big companies. We also had one dump us because we wouldn't give them warrants in our business. That was GM. But at the time, again, there was a chair-throwing episode. It may have looked something like this. So I set out to be a psychologist, and this gets me to data. So one night, late night, this was back in the days of Access and PowerPoint and Excel, before we could ask ChatGPT to do all of our work, I had this hypothesis. And my hypothesis was that there was nothing to the increase in stock price, and we were talking billions in market cap, with Ariba especially, who would go on to acquire FreeMarkets eventually. I didn't think there was that much to it. I had this hypothesis that their press releases, and we were winning customers, so were they, but they press released every customer in every marketplace tied directly to their stock price increase. And FreeMarkets, being kind of, an intellectual company, thought press releases were too low for us. So I plotted on a slide, I did a quick regression, and I saw, oh my gosh, the correlation between putting out press releases and stock price was literally like 0.99. It was there. So I came in with this chart the next day. Again, underslept, typical of those years. And I told the team, guys, don't throw chairs anymore. I figured it out. We need to hire a PR person and do press releases. And sure enough, we did. and we slowed the slide, right? It came crashing down to earth. But that little experience in data reminds me of where we are today. So even though my experiment in data at the time prevented the desecration of the throwing of further Aeron chairs, about $800 a piece, as I remember back then, probably a lot more than that today. It brings me to the moment we are in SaaS today, that data assets have become really valuable. And data assets aren't just limited to the traditional realm of B2B data providers like price reporting agencies in the energy, the metals, the resin and petrochemical space, the forestry space, the travel space. There are many. You may have heard of SupplyFrame in the electronics market, or Brightfield in temporary labor, or ResourceWire, which used to be Forest to Market, or RTI in plastics, all people who provide data on commodity markets. Those are increasingly used in procurement, and they're valuable to others, as I'll get into in a minute, besides just procurement and supply chain and sales. But increasingly, data assets are being generated by software companies as well. And at first, and I think I've got to give Coupa credit, even though my colleague Pierre Mitchell, to use a British expression, kind of took the piss out of the three suite providers earlier today on stage, which he did in a very nice way. But Coupa created the first set of community insights on benchmarks through opt-in that really became the basis of how they sold. And it really drove competitive differentiation 5-6 years ago, and still does, based on having benchmarks from a broader set of companies in a given market. But now a lot of others, Cievo included, and others in this room, have built scale through opt-in community insights. And what's interesting here, not only are potential customers of that the users, but also investors, which I'll get into in a minute in terms of why they're important. So my thesis, and hopefully this proves at least partially right in the next 5 years, is that whether you're a software company or a corporate, you have data assets in your business which are waiting to be unleashed. So what are data assets? I mentioned commodity price information. That's one example. But another one, transactional or network data. And it doesn't just have to be procure-to-pay data, though it certainly could be. It could be supply chain transactional data from an 09 or E2Open or Kinaxis. It could be transactional data and operational performance data of suppliers. It could be trade flow information. There are a number of startups in the supply chain risk space who've gotten started just based on trade flow data. Performance data, inventory data, the list goes on, forecasting data. All of this can be uniquely valuable. And probably finally, you may have heard the Exeter talk earlier today, and there are a number of risk providers here. Risk data can be really interesting as well, and it's not just the trade flow data, it's other information as well. So data assets may be broad, but the greater you go in depth, the greater the value. So what is the value from exploiting this opportunity? So I believe, and we're really in the early days of this, but I was turned on to a business by a software vendor named Gulp Data, who I've recommended to a bunch of SaaS companies already. I don't have an affiliation with them, I just find them really interesting. And they have some peers as well. But they work with SaaS companies to figure out if they have data assets which might be valuable to Wall Street. There are folks out there like AltHub who do backtesting of SaaS data. And some of it's really interesting. I apologize, I'm going to sit. I've had a back issue. But these data assets, could be, for example, not just P2P transactional data or commodity data. They could be corporate travel data as a leading indicator. And these, as I said, are really valuable to investors as leading indicators. Things like the PMI are interesting, but these are even more interesting. So software companies are potentially sitting on a gold mine of data, but they've got to figure out how to use it. For existing data businesses, now is the time to shine. Owain Kelly, who leads thought leadership for the Chicago Mercantile Exchange, probably the biggest commodity exchange out there today, literally wrote a book on price reporting agencies and the value of these data reporting businesses, which were really backwaters only a couple of years ago, has now exceeded SaaS companies. And I'll skip the investment side, but for corporations, it's really interesting. I've not seen any spin-out divisions yet from procurement data, but they're coming. So just a few examples in the corporate world from supply chain and operations data of new divisions or spinouts, literally new business lines generating in the aggregate billions of dollars per year, even for individual companies. Not all of them, but AWS supply chain is one example. Maersk with TradeLens, taking operational data and tying it to the blockchain. Siemens MindSphere using the Internet of Things and digital twins based on operational data they realized internally and then taking it external. Caterpillar Connect. So Caterpillar builds huge industrial equipment, but they have a whole new P&L and division which is dedicated to looking at the usage of that equipment to encourage economy and proactive replacement of parts before things break down. It can also have huge ESG impact as well based on the recommendations on operating efficiency for driving these vehicles. Rolls-Royce has a predictive business line for their airline engine unit, which they also sell separate from the engines and parts themselves. We're all familiar with GM OnStar. It's gotten a bit of a bad rap recently in the US because of selling data unbeknownst to people who opted in to insurance companies. So if you have OnStar, make sure you opt out if you're going to take that Cadillac and drive 120 on the highway, but still a good business unit. And John Deere. So John Deere, the classic farm equipment company, has a business unit called the John Deere Operations Center, which is focused on improvement around when farmers should plant, around lowering costs for planting, and for optimizing planting timing. Not optimizing planning, as in supply chain, but truly optimizing planting. So these are individual business units in big companies making billions of dollars on operational assets. I think we're going to have the same in procurement as well. I don't know what it's going to look like, but I know they're coming. So one mega theme here that you've heard throughout all the presentations has been about fixing your data problem. So just to toss up some data on the stage from a CPO study that Spend Matters does with Deloitte every couple of years, one constant theme has been the biggest barrier to digitization in recent surveys has been the quality of data. After all these years, yes, our data still sucks, right? We have to fix it. I think not only with AI have we got a chance to do it better and faster, but with the imperative of doing more with less on the category side, on the planning side, on everything we do, fixing that data is becoming a priority. And from that, I think will spawn really interesting business ideas. So you're probably asking, what is the role of GenAI and broader AI, ML in all of this? So it's a cliche, but it's true that if data is the new oil, then GenAI and broader data science, you may have heard the panel on direct materials with a few of my colleagues not so long ago this afternoon, but other forms of machine learning like neural nets, for example. These are the refinery that transforms the oil of data into everything that we can use to not only streamline procurement, drive sourcing automation through bots, but also to drive predictive models for risk, for commodity prices, for overall category strategy, and much, much more. So really, in short, AI ML brings automation and scale, and even can introduce creativity around category planning and category strategy, which we didn't have before. So just very quickly, for a procurement twist, consider commodity data insights. I pushed somebody on this in one of the pre-sessions on Tuesday, but again, tied to this thesis, I think we will have virtual category managers, almost digital twins of ourselves in category strategy in the years to come, based on not only having data around commodity markets, supply markets, and risk, but then being able to act and execute. Right now, that's already happening in sourcing automation from sourcing negotiation, channeling the old FreeMarkets years. Now it can be completely automated. But even coming up with category strategy management, I think we may have AI twins competing against us in the not-so-distant future. So GenAI is a huge, huge piece of this. I want to touch on just a very quick case study from a SaaS company with a data asset, just to give you ideas in the room. So I mentioned the Wall Street play. So if you have data that can correlate against stock tickers, and again, that could be aggregate supplier performance data, which you have the rights to. It could be aggregate risk data. It could be pricing data in your network or everything flowing through. You can actually backtest that against industrial sectors and stock tickers. And what you'll find, and what I've discovered recently, is that it doesn't take a very high degree of correlation to have a data asset that Wall Street might want to buy. You're hearing this from me. There are companies in this room doing this who won't talk about it because they don't want people to know their data assets are really valuable, but they are. So you can have a sector correlation in the high 0.6s or low 0.7s and have something really valuable. But you might find with certain data, of 5,000 publicly traded companies, you may have 400 over a 0.8 correlation, and that's really of interest to investors. Outside of that, though, and outside of community insights, which is hugely valuable in sales, with AI/ML, you can now do forecasting and predictive models as well. So it used to be literally the realm of the top trading funds like Rentech and others who constantly beat the market with 40 and 50% returns, not by hiring classic traders, but by hiring quants. You can now, with not a lot of effort, if you have good data sets behind you and good hypotheses, backtest those data sets. So one example is just a commodity model here on the left with only a 4.5% error rate for a one-year forecast for a commodity, using not only existing price data, but factoring other areas like macroeconomic data, trade data, global equity indices, and others. So there is power in your data if you're in the SaaS world today. You just need to know where to look and how to get started. So I want to close on key questions to consider for tech firms and corporates. I think on the tech firm side, we are just literally, to use an American baseball analogy, in the top inning, if you will, or the first half of the first inning and the first batter. So where do you start? The first is really making data the basis of how you work with customers, right? GenAI is certainly helping this, but if you're a P2P provider, if you're an AP provider, if you're in direct materials, wherever it is, benchmarks can be a huge competitive advantage. And if you don't have a product manager focused on that today, I would certainly put one on it. You can also think about building data businesses in midstream. I have this theory in the next couple of years that on the venture side, we're going to see folks come in and work and even potentially buy future revenue streams or a portion of them around data assets early on for potentially promising companies. But you can do that today if you're a company obviously far in advance of that. So backtest your data, look at it. Are there alternative buyers besides Wall Street who might be interested in your data as well? Potentially even governments doing economic forecasting. So the key, though, here on the tech side is to make sure you can create the right team and test your hypotheses. This is not just about having GenAI run the correlations for you. This is really about testing hypotheses and getting dirty with the data yourself. If you have some spare resources on your data science team, you can do it internally. If not, you can work with folks like AltHub who will do it for you. So really, really interesting. I think the bigger opportunity, though, and again, going back to some of these companies like Siemens, Cat, John Deere, Rolls-Royce, Amazon, and others who've built, in some cases, billion-dollar businesses off the backs of their data and customer data. The corporate side, I think we're going to see new business models spawned. Back when I was at FreeMarkets, the joke was it was about IPOing your spend with the marketplaces. For those, over 40, 45, 50 in the room, we know how that ended up. It didn't work. But the business lines that can come from your procurement data are potentially really interesting. And if you're large and you have scale, a large CPG company, for example, with a trading arm, may have data that's better than others out there who are looking at the same commodities. That data could be interesting to a lot of folks, including even the providers of the agricultural commodities, just as one example. So think about potential business units down the line. Next, think about how you can use data to manage supply chain risk more effectively, and maybe even positioning yourself as a better customer, right? If you manage inbound supply chain risk better, and you can show that to your customers, you may be a customer of choice, simply because you're getting ahead of the game. You're not just ticking the regulatory box, as is often the case. I mentioned the business lines. I go back to that. I think there is something there for sure. But my challenge to you on the corporate side is to think about how will you use knowledge graphs, digital twins, and GenAI, among other areas, not just to mine what you have, which is a great start after you fix your data, but also to create competitive advantage. Also as well, and this goes for the software companies you're working with at DPW, think about your data rights and SaaS agreements. I often think it pays to play, for example, in data rights. You probably want to share to get the benchmarks back, but you also may have some data you don't want to share because you may see value in it that others don't have yet around your transactional data. So with that, I really encourage you to think about the potential for data assets. So back to that chair and my one truth in all of this. My challenge for you is every time you think about procurement technology, don't just think about how it will solve a very specific problem, but think about the data advantages it could create. And the one truth, keep digging if you've not discovered your data assets, whether you're a SaaS company or a corporate. You have them, and there's gold in there. And in the next 5 years, I think you will likely discover it if you look hard enough. So thank you.